Is Adelaide about to crash in 2026, or is it about to shock the country again with another boom? Hey guys, Scott here. I have done deep dives on Perth, Brisbane, and Melbourne recently, and every single time the comments fill up with the same question. People keep asking me, Scott, what about Adelaide? And I get it, because if you look online, the opinions about Adelaide are all over the place. Some people are calling Adelaide overheated and overdue for a pullback. Others are saying Adelaide is only getting started and could even outperform other states this year. But when you look at the data, Adelaide does not look like a market that is slowing down. In fact, over the past few months, momentum has picked up again. So what is actually going on here? Before we jump to conclusions about 2026, we first need to understand how Adelaide got here in the first place. Because there are a few forces behind Adelaide's boom that most people never talk about, and those forces are going to decide what happens next. And I'm going to be honest, one of these forces is so under the radar right now that it could completely flip the script for Adelaide in 2026. And almost nobody is covering it properly. Quick one before we start. I do one of these videos every single day on property and the economy. So if you want to stay ahead of the market, hit subscribe and hit the bell icon. Okay, let's get into it. Now, most people assume Adelaide boomed for the same reasons as every other city. That assumption is wrong. When interest rates were cut to near zero in 2020, most capital cities surged immediately. Sydney, Melbourne, Brisbane, and Hobart all took off almost straight away. Adelaide did not. In fact, Adelaide was the only major capital city that initially went backwards when rates were cut. That matters because it tells us Adelaide did not lead the boom. Adelaide joined it later. What happens next explains everything. As prices exploded in Sydney, Melbourne, and Brisbane, affordability disappeared quickly. Buyers did not stop wanting homes, but they had to look elsewhere. That is when Adelaide came into focus. Adelaide began to look like the value option. It offered lifestyle, space, and prices that still felt achievable when other cities became out of reach. So Adelaide's boom was not the first wave, it was the spillover wave. Demand arrived later after other markets had already run hard. That timing difference is critical for what happens next. Another force quietly supercharged Adelaide's boom, and it was not just population growth, it was who was moving there and why. Permanent residency matters. Australia makes it easier for many skilled migrants to secure permanent residency if they live in regional areas, and Adelaide qualifies as regional. That makes Adelaide more than a lifestyle choice. For many people, it is a strategic move, possibly a short-term move. But there is also a second layer here that made the boom stronger. Adelaide did not just attract overseas migrants. Adelaide also welcomed a lot of interstate migrants, and that is a big deal. Later in the video, I'm going to explain why interstate migrants often matter even more than overseas migrants for house prices, because they usually arrive ready to buy, not just ready to rent. However, for now, just lock this in. Adelaide's demand was boosted by a combination of spillover buyers, migration incentives, and strong inflows from other states during the boom years. Now we need to switch gears because the real question is not what happened back then. The real question is what is happening right now for 2026. All right, guys, now let's talk about where Adelaide is sitting today, because this is where the real pressure starts to show. Every housing market ultimately rests on the state economy. Income growth, borrowing power, and long-term demand all flow from that foundation. You must realize that South Australia's economy is extremely small. It accounts for about 5.6% of national GDP. When you compare that to other boom markets such as New South Wales, Victoria, Queensland, and Western Australia, that difference is obvious. Now let's look at growth, because size is one thing, but growth is another. The state's economic growth is modest. It is growing at around 1%, which is below the national average. That statistic matters. Wages also reflect that reality. Weekly earnings in South Australia sit toward the lower end of the national range. Wage growth has been steady, but it has not kept up with the pace of housing costs. And that is where things start to get very uncomfortable for Adelaide. Now we bring in the next force, and this is where the story really starts taking a U-turn. Population growth in South Australia is now running at around 1%. When you compare that to Victoria, Queensland, and Western Australia, which are closer to 2%, you can see the difference straight away. The population growth levels are also well below the national average. And if that was not enough, here is the bigger blow. Interstate migration, the factor that led Adelaide's post-COVID boom, has officially turned negative. This is important, so let me slow down and explain it clearly. Interstate migrants usually matter more than overseas migrants for short-term price pressure because interstate movers often arrive with jobs, equity, and the ability to buy right away. And right now, more people are leaving South Australia than moving in. The reason is simple. The three big reasons people moved to Adelaide during the boom were affordability, lifestyle, and flexible working arrangements. Those reasons have now weakened and softened. Adelaide is no longer the affordable option it used to be. When housing costs rise, people have to cut spending in other parts of life, and that hurts lifestyle. And now, more employers are calling people back into offices, which reduces the ability to move states and keep the same job. So demand is not disappearing, but one of Adelaide's key support pillars, which is strong inflow from other states, is no longer pushing in the same direction. Now, when you combine a small economy, modest growth, and weaker population flow, you get the next outcome, and this is where the story starts to become dark. Now we are in the affordability part of the story, because this is where the strain becomes impossible to ignore. Adelaide is now the most unaffordable capital city in Australia when you compare dwelling prices to income. It's even more unaffordable than Sydney. Prices in Adelaide are roughly 10.8 times household income, which is higher than Sydney. And guys, that should blow your mind because Sydney is one of the most expensive cities on planet Earth. Yet Adelaide has become even more stretched when you compare prices to what households actually earn. And it gets worse when you look at the real life affordability metrics. It now takes more than 13 years to save a deposit in Adelaide for Adelaide locals. Over half of household income is required to service a new mortgage. And across many of these metrics, Adelaide sits right behind Sydney. But here is where Adelaide takes the crown in the worst way. Adelaide is the most unaffordable rental market. More than 36% of income is needed just to service rent. So people in Adelaide are getting squeezed from both sides. They cannot rent comfortably and they cannot buy comfortably. And this creates the biggest question in the whole video. If households are under this much pressure, how can prices keep rising? Now, when affordability hits this level, behavior changes. People stop upgrading, renters tap out, households delay decisions. That does not mean prices collapse overnight, but it does mean momentum becomes extremely fragile. And now we hit the most unusual part of Adelaide's market. This is where Adelaide becomes an exception across the country. In most boom markets, when prices rise, rents rise too. That keeps investors engaged, it keeps yield supported, and it keeps competition broad across buyers. But that is not Adelaide's story right now. Adelaide is becoming a conflicted market because while prices have been rising, rent growth has weakened sharply, and in some segments it has started going backwards. That is unusual, especially when prices are still high, and it tells you renters have hit the ceiling. We already discussed that Adelaide has the highest share of income required to service rent, and that means renters simply cannot pay a whole lot more. At the same time, investors start getting squeezed. When rents stop moving, yields compress, and investors become cautious. So what happens next is extremely predictable. The premium end of the market slows first because that is where demand becomes capped. Fewer buyers can reach those prices, renters cannot support higher rents, and investors cannot justify the numbers. And you can already see that split forming. The premium end, which is the upper quartile, has slowed sharply, but the demand does not vanish, it just reshapes. It moves towards the affordable end of the market because that is where first-time buyers can still compete, especially with government schemes and deposit support. So Adelaide becomes a two-speed market. Inner ring expensive properties face capped demand, outer ring affordable properties keep seeing competition, and that pattern is already visible in the data. It is likely to define 2026 as well. So what happens in 2026? So let's land this. I've thrown a lot of information at you, and if you're trying to make sense of it all, leave the video with this analysis. I do not think Adelaide is about to crash across the board, but I also do not think Adelaide can sustain the broad-based boom of the past few years. Yes, will some suburbs grow in Adelaide and be a good investment over the next 2 to 3 years? Yes, but is Adelaide where you want to place your capital over the long term, over a 7 to 12 year window? You really have to ask the question, are there better markets? Are there better areas? There's over 15,000 suburbs across Australia. Can I find some better areas than some of the locations in Adelaide right now? The drivers that power the Adelaide boom, affordability, spillover demand, strong inflows, and delayed momentum, they are fading. The constraints are a small economy, modest wage growth, weaker population flow, and stretched affordability, these are becoming more dominant. So in 2026, Adelaide is likely to remain a two-speed market. The premier inner ring is likely to stall or move slowly. The affordable outer ring is more likely to hold some momentum, especially in areas that have strong connectivity and sit within buyer price limits. Now I want to throw it back to you. What do you think Adelaide does in 2026? Does it crash? Does it boom? Or does it split into a two-speed market even more than it already has? If you found this useful, hit like, hit subscribe, and hit the bell icon so you do not miss the next update. This was your daily property update, your 5 to 8 minute insight into property and the economy so you can stay ahead of the market and make smarter decisions and become a property insider. Drop your view in the comments and I'll see you at the next video.